The Fed faces a 1-2 punch this week, a double whammy of jobs and inflation. The US rate story may be about to reset. Back-to-back employment and inflation data arrived this week, landing at a delicate moment for the Fed. Job cuts have reached recession-era levels, and speculation builds about a more dovish future Fed leadership. Markets expect the next rate cut to arrive in June, but is that about to change? Josh Passmore is Investment Director at Artemis Investment Management. So Josh, economists expect payrolls to rise by just 69,000 in January, while the White House says that slower population growth means that weaker jobs numbers are ahead. So are concerns about labour market fragility now justified?
They probably are to some extent. So you pointed out, 109,000 job cuts in January. We haven't seen those sort of levels since the pandemic. And I think there are now sort of 1.8 million people on continuing claims in the US. So I think, the labour market is clearly slowing down. That's from a pretty strong place. But I guess the counterweight to that we maybe need to be aware of is it looks like the US economy might be reaccelerating. So Atlanta Fed GDP now thinks we're looking at about 4% real GDP growth. And actually sort of earnings and data from, the banks, the airlines, Visa, MasterCard, et cetera, would suggest that the economy, i.e. consumer spending, is still quite resilient. So I would say yes, but it needs to be seen in that context, I think.
Let's talk about inflation. And the core reading this week is expected to slow to its weakest pace since early 2021. Does that shift the Fed's focus away from inflation, or is the dual mandate still finely balanced?
I still think they're in a difficult spot, to be honest, because yes, I would agree with you on inflation. But if we look at PPI reading in December, that's now running at about 3% annualized, had its largest increase in about 5 months. Chair Powell still thinks that inflation has not really shown up from tariffs yet. So I think you could argue actually that inflation risks are still skewed to the upside. So the dual mandate is still very important. And I do think, when we maybe have risks that the labour market is deteriorating and inflation risks that are skewed to the upside, that really leaves the Fed in quite a difficult spot.
You mentioned that stronger Atlanta Fed GDP Now model, but President Trump says his Fed pick could drive economic growth to 15%. Is that achievable?
I think we've maybe learned to take sort of President Trump's the stuff that he says about the economy with a bit of a pinch of salt. Most emerging markets won't grow at 15%. So I would say probably not. Could we get to 5? Maybe. If Kevin Warsh can sort of drive lower short-term rates, that's stimulative. He has sort of argued for reducing the Fed's balance sheet. So maybe that's a bit of a counterweight. But frankly, if you think lower short-term rates, a good amount of fiscal stimulus in the economy that doesn't look like it's going away, then yes, I think growth could accelerate. Can it accelerate to 15%? I'm not so sure myself.
Well, retail sales are due up today, expected to show another solid month, despite the ongoing affordability pressures. So what's keeping US consumer spending?
Yeah, it's interesting, isn't it? So, wage inflation is sort of 4 to 5% if we look at survey data. The savings ratios continue to fall in the US as well. But I think the most important driver of this spending by far is the fact that, the top 10% of US consumers in terms of wealth drive, by some estimates, 50% of consumption. And actually the wealth effect that those wealthy consumers have enjoyed over the last few years from the sheer amount of US assets, i.e. stocks that they own, has been quite substantial. So, the effect of those wealthier consumers spending more has significantly outweighed maybe a little bit of downtrading in lower income consumers.
Well, Warsh's potential first meeting in June is seen as the next realistic window for rate cuts. Is there any chance that the Fed moves sooner?
I mean, you never say never, but I would say probably not. If you look at the dot plot, it's still a bit of a mess. There's a real kind of divergence between what different members of the FOMC think is appropriate with respect to rates. The Dow's just hit 50,000. Signs that the economy is reaccelerating. So it doesn't look like policy is massively restrictive. I would imagine that the Fed will probably hold until then, given there's a real lack of consensus on the FOMC.
That was Josh Passmore from Artemis Investment Management. Don't forget, you can watch more videos on Reuters.com.